What do you believe, the sort of the word on the street in terms of feeling like the chances of a soft landing, a no recession, are actually increasing, or do you continue to look at the yield curve inversion for that warning signal?
We are continuing to look at things like the yield curve inversion for that warning signal, but not just that. We also think that every time the Federal Reserve has raised rates this quickly and to this magnitude, it has created some kind of dislocation in the economy. And I think some would argue that we've already seen that dislocation with the many bank crises back in March. But we still think that because the Fed is continuing to tighten, there are lagged effects that, it is likely that we still have some downside ahead of us. So we would continue to be cautious in the equity markets and in the fixed income markets.
Where would you be positioning that in terms of not missing opportunities at this point either?
Yeah, that's a really important point because we have not been out of equities, but we have moved our equity positioning around to favor U.S. large caps over small caps and mid caps. And we like U.S. and developed markets over emerging markets. So it's really about positioning within the equity space as opposed to being out of equities completely.
You're not worried about valuations in the U.S.?
We are concerned about valuations for, in particular, the Super 7 stocks. But beyond those stocks, the valuations do start to look a bit more attractive. Now, that does not mean that we're not facing some headwinds because of valuations. All of the return so far this year has been multiple expansion. None of it has come from earnings. And we are in the third quarter of negative earnings. So there is some risk with large caps as well. We just think that there's a higher quality positioning available within large caps than some of those other asset classes.
The rate hike coming from the Fed this week seems to be very much baked into prices in markets. So what will you be watching out for?
Yeah, so we'll be watching out for what the Fed says about upcoming meetings. So it's very possible that they could add another hike or even two into the mix. They may indicate that they would consider pausing in September, but we think that they'll keep a rate hike on the table. They may decide to go every other meeting and continue to watch the data. But really, it's going to be that post-meeting commentary that will move markets.